Welcome to this financial comparison. Today we'll be comparing two of the world's most robust financial indices, the FTSE 100 and the S&P 500. What are they, how do they function, and how do they reflect their respective economies? Let's find out. Starting with the FTSE 100, it's a share index of the 100 companies listed on the London Stock Exchange with the highest market capitalisation. It's seen as a gauge of prosperity for businesses regulated by UK company law. The index is maintained by the FTSE Group, a subsidiary of the London Stock Exchange Group. On the other hand, the S&P 500 is a stock market index that measures the stock performance of 500 large companies listed on stock exchanges in the United States. It is one of the most commonly followed equity indices and is considered to be one of the best representations of the US stock market. The biggest difference between the two indices is the geographical focus of the companies listed. The FTSE 100 contains more multinational corporations, while the S&P 500 is heavily skewed towards domestic American companies. Let's take a look at the companies. The FTSE 100 includes companies from all sectors, but it's heavily weighted towards financials and energy companies, whereas the S&P 500 includes companies from various sectors, but with a strong focus on technology and healthcare. In terms of market capitalization, the S&P 500's market cap is considerably larger. This is largely because it includes many of the world's largest and most influential companies, such as Apple and Microsoft. When it comes to performance, over the last decade, the S&P 500 has generally outperformed the FTSE 100. However, keep in mind that past performance is not a reliable indicator of future results. Currency fluctuations can greatly impact these indices. As the FTSE 100 is denominated in pounds, while the S&P 500 is in dollars, a weaker pound can boost the FTSE 100, while a stronger dollar can uplift the S&P 500. Both indices are often used as economic indicators. The FTSE 100 is seen as a barometer of the UK economy, while the S&P 500 is often used as a proxy for the US economy. Investing in either index provides different exposure. The FTSE 100 provides more international exposure, while the S&P 500 provides exposure to the US, the world's largest economy. Historically, the FTSE 100 has had higher dividend yields compared to the S&P 500, making it attractive for income-focused investors. The S&P 500 tends to be less volatile than the FTSE 100. This is largely due to the former's diversification across sectors and companies, and the stability of the US economy. The FTSE 100 is rebalanced quarterly, while the S&P 500 is rebalanced annually. This means the composition of the FTSE 100 can change more frequently. Both indices are accessible to individual investors through various investment vehicles such as ETFs and index funds. However, the S&P 500 is more widely available due to its global significance. Each index is subject to their respective country's financial regulations, which can affect the performance and stability of the companies listed. Political events can significantly influence these indices. For example, Brexit negotiations have caused fluctuations in the FTSE 100, while US-China trade tensions have impacted the S&P 500. When investing in either index, investors should consider various risk factors, including economic conditions, political events, exchange rates, and regulatory changes. To summarize, the FTSE 100, with its higher dividend yields and international exposure, may be attractive for those seeking income and diversity in their portfolio. Meanwhile, the S&P 500, with its larger market cap, lower volatility, and exposure to the US economy, is a solid choice for those seeking growth and stability. Both indices offer unique opportunities, and the choice depends on individual investment goals and risk tolerance. And that concludes our comparison.